All right, everybody, it is Crypto Day with Spencer, the master of disaster when it comes to cryptocurrency. Like literally, I've gone through his courses, blew my mind, what I've learned. I've been trading crypto ever since this man came into my life out there in beautiful Salt Lake City. Do you even crypto, bro? I did like a little drawing for all of you. I guess that's kind of slapping Spencer in the face, but you know what? Hey, hit the help button because you all need help. The no help button, you don't want that one today. So Spencer, welcome back to the Wealth Webinar. I'm so excited to have you here, and I'm so excited to talk about this new wave of digital currency, whether it's Bitcoin, Ethereum, Dogecoin, or any of these other shit coins. And we can swear if you want to get into it, because I really want to know a little bit more as to why are so many people excited about coins that literally have no backing, no fundamentals, nothing. Just somebody says, oh, you should buy this coin, and they're doing it. So anyway, man, the show is yours.
Well, thanks for having me on, Chris. I'm so relieved that you finally dipped your toe in the water to get some crypto. I know when we first chatted, you're like, I don't want any part of that. Maybe talk to me in a couple of years. I'm very relieved that you've done that. So
yeah, man. Hey, I'm a good student. I've been dollar cost averaging in every single week, buying on the I'm still playing it like I do any other stock with the support and resistance. So I was buying at 29 and 30, selling some pieces off at 40, but I was just waiting for it to break that ceiling, and it did. So now I'm watching very closely to see where we're going next.
Awesome. And Steven, what about you? Are you in?
I've been in and out a little bit, but I'm still kind of sitting back right now.
Okay. Well, I'd like to get just a pulse on those that are here. Do you, I guess we could ask it, do you even crypto, bro? Like, do you have crypto? Yes or no?
Jameson said yes. Oh yeah, here we go. One full coin, that's good.
All right. Okay, it looked about 50-50.
Maybe even a little bit better than 50-50. I'm thinking you're more like 60-40 on that.
Okay. I got one more question then. How many, if you, for those that do, so only for those that do have crypto, how many have at least 5% of their net worth into crypto? 5%.
I'm going to say a big fat no for me on that one. I might change that after today because I got a lot of money sitting on the sidelines waiting.
Okay. So today, the majority of my presentation, what I prepared for, is going to be around Bitcoin, because before you get into the shit coins, you have to fundamentally understand Bitcoin. Not that I do not, I definitely recommend all the other coins, and we can get into those a little bit later, but I just wanted to make sure everybody starts with this foundation of Bitcoin. So don't think that I am political, or just because the crypto world can be political and people can choose sides of only Bitcoin, only Ethereum, only Dogecoin. I am not one of those. I'm a lover of all coins. They all have their time and place, but today the presentation is going to be mostly about Bitcoin, but again, we'll open it up for questions for all the others. So let me share my screen and we'll get into it. And again, I really appreciate the conversation in the chat. Like, I want this to be a conversation. I don't want this just to be me presenting for the next hour. Like, the more engagement, the better. So thanks for asking the questions and being part of the conversation. So today, I was trying to come up with a title for today, and I came up with the 3 power truths of crypto. I feel like if you fundamentally believe or understand these 3 truths, it should sell you on being a big believer on crypto, and that it would probably incentivize you to be more in the 5% of your net worth holdings of crypto. So I'm not, again, this is not financial advice. I am not a financial advisor. I'm only an educator. I do not care if you put more or less into the crypto game. I have 90% of my net worth into crypto. I don't think that's healthy for anyone because it has been a roller coaster. Ideally, I'd like to be closer to 20, 25%. But at the moment, I'm about 90%. So, but we'll get into that. For those of you who don't know me, and I'm guessing most of you don't, I'm the founder and CEO of Uinta Crypto Consulting. I teach and educate people on the benefits of crypto and blockchain full time. I got into the Bitcoin blockchain space in 2016. It was actually very shortly after reading the book, The Fourth Turning, as well as the book, The Creature from Jekyll Island. I actually bought my first Bitcoin the day after finishing the book, The Creature of Jekyll Island. When I bought Bitcoin in 2016, I was working for Microsoft. I was their blockchain evangelist for the Bay Area. So that gave me the opportunity to work day in and day out in the space and really become that expert, which enabled me to turn $13,000 into 1.2 million over the course of 18 months. And since then, for over the last 5 years, I've been able to teach thousands of people and influence millions of dollars of investments into crypto. So the reason I love crypto, and again, I'm not a financial advisor, and the one thing I cannot do is I cannot tell you what you should expect. So I do not expect any type of return, but the reason I love crypto is because I think, for me personally, there's an opportunity for me to 3 to 6x my money in the next 6 to 9 months. Longer term, over the next 5 to 10 years, I think there's an opportunity to 10 to 20x my money. Another part I love about it is that it's completely liquid, meaning you can sell and buy whenever you want. Most investment opportunities that give you those type of returns are going to require you to be locked in for at least 12 months, if not 3 years, 5 years, 10 years. And the number fourth part why I love crypto, and I love crypto at any point, is because you can start with any amount of money. Again, a lot of investment opportunities that promise or, that have such opportunity of returns require you to come in with $100,000, $50,000 at the minimum, but you can start with $100. You can start with $1, but you can start with $100, $500, $1,000, whatever money makes sense for you. You can start with that amount. And so that's why I think crypto is great for anybody, especially right now. So to kind of, before I get into the why of crypto, why Bitcoin, it'd probably be helpful to hear my story of what happened to me and my progress. So it all started when I was working for a startup in San Francisco. This company was Xamarin. And I joined, there was 100 people. I think, and I've joined early. If we ever go public or get acquired, I'm going to make a buttload of money and I'm going to get rich. Well, turns out that our company was super successful. We grew from 100 employees to 400 employees. We got acquired for over 400 million by Microsoft. Turns out my stock options weren't worth much. As an entry-level employee, even if you're number 100, your stock options, I came in on like the Series A funding, and we ended up raising 2 other rounds, but you don't have enough to really make meaningful money that's going to change your life. And so I realized that if I am going to get wealthy, I needed to figure out a different way to do it. So I'm living in San Francisco at the time, and real estate prices are like all real estate prices in San Francisco. They were high, and I didn't have the financing to do that. And so I went to the next best thing. I started with the stock market, primarily because that's where my dad had experience. And so I thought, I'm old enough, I'm an adult now, I need to figure out this investing thing. And so I started with stocks. And like every new stock investor, what stock do you think I bought? I bought Apple stock. And eventually I got tired of that. And I figured out I could diversify myself a little bit. So I got into ETFs. Then I got bored with the returns. I was like, I think I can be making money faster. Why don't I try this options thing? So I got into option trading, and I literally was consuming podcast after podcast, articles, newsletters. I was on Reddit channels. I mean, I was consuming probably 6 to 8 hours of podcasts a week, trying to figure out where the edge was into how to make money investing in the stock market. The problem, and I'm sure this has been for other people investing in different things, nothing really worked. And mostly I was all over the place, right? Like I remember I invested about 20,000 in the market, and the first 2 months were amazing. I was up $4,000. I think I was up 20% in the first 6 weeks. Well, then my beginner's luck turned, and I proceeded to lose not only that 4,000, but 10,000 over the next 10 months or 6 months. Nothing was consistent. It was super frustrating. And I'm like, I don't know if I'm ever going to get good at this. Well, while I was doing that, I was doing a ton of reading. Like I mentioned, I was reading The Fourth Turning. I was reading The Creature from Jekyll Island. And basically got introduced to Bitcoin and Ethereum the day after reading some of those books. And at the time, I was just thinking that this was funny money, that they were talking about Ethereum maybe being the next Bitcoin, and that sounded interesting. So I started doing a deep dive. But the problem is back in 2016, if I wanted to learn about it, I had to do it the old-fashioned way. There weren't the podcasts, the YouTube videos, the TikTok videos that you see proliferating social media today. I had to go find real people. Thankfully, I was working at Microsoft and there was a blockchain team. And so I went and made friends with those that were working on the blockchain team. I was like, guys, you gotta help me out. What is this blockchain stuff all about? I was reading the articles and it just didn't make any sense. I was a smart guy. I studied electrical engineering, like I understood technology, but this just seemed to be way over my head. And thankfully I had some coworkers and friends that were able to sit down with me and be patient with me to help me figure what this blockchain thing was. So long story short, I ended up joining their team, became the blockchain evangelist for the Bay Area. So I got to speak at all sorts of conferences, got to study it day in and day out, and really becoming an expert. And that only came from countless hours trying to, make sense of the different articles that I was reading, spending time with mentors and going through presentations to become that expert. And that's really what gave me the confidence to then turn that $13,000 into 1.2 million. Well, when I think back onto what changed from being able to be successful in crypto versus the stock market, well, obviously Bitcoin went up, but I could have easily sold out prematurely. What happened was I found mentors that educated me and helped me identify my blind spots. I invested in real education, not just information that I found online, and I gained a fundamental understanding. And when I did that, I have this bad habit of feeling like I need to share something that's benefited, blessed my life with others. And so that's what I did. And I tried to find as many different venues to be able to share the information that I've learned. And so I wrote a really short ebook. I wanted to present the information that I knew in about 30 minutes I thought everybody has 30 minutes to give Bitcoin crypto a chance. I created a newsletter and I started posting on LinkedIn every day. I took every opportunity to present at conferences, on YouTube channels, really just trying to get the word out there because I was super passionate that everybody needed to understand this. And I understood that for the most part, it was a really confusing topic that people weren't taking the time to understand. Well, as I did that, I was really nervous at first to be deemed like this crypto guy because just like what Chris said, like, do you even crypto, bro? I didn't want to be one of the crypto bros that is just, shilling the latest coin that's going to, people are going to get really excited about, and then it pumps and then it dumps and people end up ruined. I didn't want to be that guy. But thankfully, I got a lot of positive feedback that people were really feeling like they were understanding and learning what crypto really was. And that gave me the confidence to take it further and to continue sharing my message. But as I talk to more and more people, as I've been able to share this with thousands of people, I come up with 3 power truths. The 3 power truths that if you understand this, you will understand crypto and realize why it's important for you. All right, so let's dig in. Truth number 1, blockchain is coming. If you don't believe that it's here, you have to believe that it's coming. Now, here's where I need a poll. I need to hear some from you guys. How many of you feel confident that you could teach what blockchain is to your mother?
I failed.
All right. We all agree that we've heard the term blockchain, but to understand it to the point that we could teach somebody, our moms are smart. You should be, should be able to get it, but we don't. It's hard. So I'm going to give you a way that we can understand it. And so you can't believe that blockchain is coming without understanding what blockchain is. So there's 4 components to blockchain. You don't have to remember these. We'll go through them, but it's a ledger that is shared, that's distributed and secure. Those 4 words probably don't mean anything to you. So let's dive in. What is a ledger? A ledger is super simple. And that's the problem with blockchain, is it gets overcomplicated, doesn't need to be. Think of just a ledger, the thing in the back of a checkbook. I know, actually, maybe I don't want to offend anyone, but I'm guessing that the majority of you know what a checkbook is. A lot of my brother's friends, they don't know what a checkbook is. But in a checkbook, when you are writing checks, the common practice of the day, this image shows in 2014, maybe people were still, filling out checks back then, but you had to balance your checkbook, meaning you typed in every time you had a deposit and every time you had a withdrawal, a debit and a credit. Every time you spend money, that's an entry into the ledger. And every time that you earn money, that also comes in as a debit. So that's all you have to know, is that a blockchain is basically a ledger of transactions. It's a ledger of all of the transactions that people that are using this system of money are participating in. Okay, so we get that it's a ledger. The second part is this ledger is shared. Think Google Sheets, right? Like, think of an Excel sheet or Google Sheets that is shared with everybody on this call. Okay, I'm going to create a Google Sheet and share it with everyone. And now every time that someone sends money to anyone in this group, we're going to say that everybody gets 100 Chris coins. Okay, and these Chris coins are good just in our group of 86 people. And anytime someone gives some Chris coin to Chris or to somebody else, that gets put on this ledger that's shared with everybody. Okay, so we got that this far. Well, there are some problems that might arise with this ledger. Anyone can think of some problems that might arise with having this ledger on Google Sheets?
The problem with just the ledger? I mean, lack of liquidity comes to my mind, because you've only got so many people you can exchange to and from.
Here we go. We got some really good and correct answers. It could be manipulated, right? It could be edited, right? Something that is shared. Somebody could say, hey, somebody gave me 10 Chris coin and they didn't really deserve those 10 Chris coin. So it's not really secure. Or it could get deleted and the whole record could disappear. Like, it could crash. There could be errors. So we need somebody in control. Who should we put in control of this ledger? That's going to be the only one that can put in an entry. So every time that there's a transaction, you got to notify the person in control that this transaction happened, so they could enter the input into the ledger. Who are we going to make the king of this ledger? I'm going to nominate Chris. Chris, with his Chris coin.
Oh man,
he's in charge. So now every time we send, I send some Chris coin to Ricky, or Ricky sends it to Annette, Chris is going to be the one that puts the entry into the ledger. All right. What happens? I know this would never happen, but what if Chris goes rogue? And Chris, he is like, I have all this power and I am going to manipulate the data so that he gets more Chris coin.
I think they did that back in the old times by clipping the corners of coins.
Exactly.
So I'm just going to charge 10% as Jameson recommended, and then I won't have to flip any coins.
All right. So you can see how a shared ledger, we might have some issues here. Well, we went through this. We talked about who is in control. What happens if there's dispute? That's a good question. So let's say I said, well, I'm supposed to have 10 more Chris coin than what the ledger says. How do you know if I'm right or not? Right? How do you prevent bad actors, people deleting, editing, and how do you prevent corruption by those in control, those in power? Well, there's a way we can do that. It's by Let's see if I got the image right here. It's by distributing this shared ledger. So instead of our ledger being on Google Sheets, everybody has this magic Excel document on their computer. And every time there is a transaction between anyone in the group, your Excel document gets automatically updated with that transaction information. It's basically connected to the internet, but it's unique. Your ledger on your computer is unique, meaning if we delete Annette's computer, if Annette goes offline, we still have everybody else's copies of their ledger. And so how we know what the truth is, meaning how do we know how many Chris coin everyone has, is we can check the majority of the ledgers, and the majority of the ledgers will hold the truth. So we're no longer having to trust one person, one entity, one company. There's no intermediary we're having to trust that they're doing the right job. It's the majority of the ledgers that are all keeping track of these transactions. Are we following? Anyone lost here? This is very essential to understand.
I'm following you.
Okay.
Shannon's good. Shannon's good. Yeah, that was pretty easy.
Okay. So the benefits of the distributed ledger is no one is in control. Disputes are automatically taken care of. The system is in place to prevent bad actors, and no one can abuse their power. This whole distributed model takes care of this idea of having to trust intermediaries and third parties. We live in a world where we're constantly having to trust intermediaries and third parties, right? Using Venmo, we have to trust Venmo that they're not going to screw up on the back end and screw us out of any of our money. The same thing with anytime we use a bank. When we go to Wells Fargo, we got to trust them that they're not going to, that when we go to reclaim our money, that they're going to have our money there. And there's been plenty of times where these intermediaries have taken advantage of us, and they haven't been they haven't, used our trust well. Anytime we give our information to companies like Equifax, and then Equifax getting hacked, that's an example of an intermediary betraying our trust. And so this idea of using a blockchain where we don't have to rely on intermediaries or third parties with our trust. Now, let me just pause and make sure there's no questions. All right. So the last part is that it's secured. The more we replicate the ledger, meaning the more copies of the ledger, the more secure the record will be, right? If there's only 3 people, if there's only 3 ledgers, maybe you could say 2 of the ledgers could team up and they could screw the third guy out of some money. But if you get millions of ledgers, it's going to be more and more difficult to modify the data, right? Like if you wanted to modify the data, you would have to hack into the majority of the computers or the majority of the ledgers and modify the individual records. And so as it grows, the more complex it becomes and the more secure. So kind of going back, it's a ledger that is shared, that is distributed, and that is secured. So blockchains enable financial systems to exist without having to rely on intermediaries who we don't know and or don't trust. You might be asking, why is this necessary? I've never been screwed. All of the financial systems that I've used, they've worked. Every time I go to the bank, I have my money. Why do we need this?
They got really lucky if that's the case.
That's true. So, which brings us to truth number 2. There is a problem with our money system. And my question to you, just with that statement, do you agree? I don't want to put, I'm just curious as to, okay, and if you say yes, please describe in one word why you say yes. Just curious as to like what exists, or where do you see evidence that we have a problem with our money? All right, you guys are getting it. Okay. The number one reason, which this is my opinion, the problem with our financial system is we have declining purchasing power. Now, there's another word for declining purchasing power, that's called inflation. And the problem with inflation is it doesn't show up on our day-to-day. It's basically stealing from us without us even realizing it. The crazy thing, if you believe in inflation, which, you know, inflation has actually been getting a lot of conversation in the last 6 months. I've been giving this presentation, I've been talking about the problem about inflation for 5 years, and it's only been this year that people are starting to open their eyes and realize that we have a problem with inflation. So questions you might be asking yourself, if you do agree that there's a problem with our financial system, that there's a problem with inflation, you ask, who is in control, right? Like when we talked about the problem with a shared ledger, we talked about, well, who's in control? Who's in control, and can we fire them? Why is our purchasing power decreasing? Why is inflation increasing? Is the problem getting better? Is it getting worse? How do we fix it? How big of a problem is this really? And what options do I have? So those are the questions that we're going to go through right now. So who is in charge? You guys have mentioned, I saw a few comments, but it's the Federal Reserve in partnership with the US government. They're controlling how much money is created, what our interest rates are. They're controlling the money system. Second question, can you fire them? Well, no. You might think, well, I could move to a different country, and I'm actually in France right now, and they're all using euros. And so maybe I could say that that solves the problem. That doesn't solve the problem, because the US, as you all know, right now holds the reserve currency status, meaning it's the global reserve currency. So all of the other currencies are basically hinging on the US's control and dominance. So doesn't matter where you move, you can't fire them. Let me see what the comments.
Wouldn't Switzerland be one of the probably only places where you can kind of get to a place where there's some level of control in their currency? Or am I still kidding myself on that one?
I mean, I guess yes, but like it's so hard. We live in such a globalized world to like become a monk in Switzerland. Like
they wouldn't let you in anyway. They don't want us over there.
That may be true. All right. So the next question, what are they doing wrong? Why is our purchasing power decreasing? Well, you might see that in the 30s, we kind of had this short-term peak. You might ask, well, what happened in the 30s that caused this significant decrease? Anyone can guess what happened? Printing of dollars, yes, but why? Why did they print money then? What was happening in the world? There was the Great Depression in the 20s, coming out of the 30s. They were trying to revitalize the economy. World War II was, I think, in the middle of, into the 30s and into the 40s, but it was the New Deal, right? The New Deal was this new program that was going to provide a lot of infrastructure spending. I think that's when they built the Hoover Dam. There was a lot of highways and roadways being built. The New Deal, yep. And so that caused a lot of money printing, and so the value of our dollar continued to decrease. We see it continue to decrease, and then there was another big event that happened in 1971. Anyone know what happened in 1971? Jameson's guessing war. Nixon. What happened? What did Nixon do? Someone saw my picture. Exactly. The dollar was taken off the gold standard. Now,
Stupid.
if you want to wait, I mean, if you want to educate yourself on why that was such a big deal, I have a website for everyone. I'm just thinking of this off the cuff because I just remembered it now. Go to I think it's what happened in 1971.com. You don't have to go there now. Pardon the bad language, but you just Google search what happened in 1971, and you can see all of these charts as to why basically our economy has basically stalled out in gold terms, and we've experienced incredible inflation since 1971.
That's
One of those
seem to work.
Okay, well, Google search later on what happened in 1971. Maybe that wasn't the right site, but it's close. You can see this chart here is the consumer price index in the US from 1775 to 2012. Pretty stable from 1775 to 1910. Then we had the World Wars. And then in 1971 is when the consumer price index is basically, it takes the basket of goods and kind of tells you what the price is relative to where it was a year ago. And you can see how the price, that index has just skyrocketed since 1971. Now, the question is the problem getting better or worse? We look at this chart and we're like, well, it looks like it's tapered off over the last maybe 20 to 30 years. Well, we know something called COVID's happened, and they've been a lot of conversation in the news about the government creating these stimuluses and printing trillions of dollars. The problem is we just don't understand really what this means. If we look at what the government and the Federal Reserve did in 2008 when we went through the housing crisis and the economy crashed, the Federal Reserve stimulated us with about $3 trillion from 2008 to 2014. That's about 6 years to print $3 trillion. Well, then just in 2020 and into 2021, we've printed more than 3 trillion. I think we're closer to $5 trillion with this latest stimulus bill for the infrastructure bill. And so when we think about it, we realize how much money is being printed. You're like, oh shit. Well, some people might not realize because it's hard to understand what $1 trillion is. I think I've done this before with you, Chris, and so you don't spoil the surprise. But if we think about the number trillion, and we first go back to a billion, and before billion, we get a million. If you know this answer, don't ruin it. But how long is a million seconds? And only answer if you're just guessing. If you know the answer, maybe don't ruin it. If you have any guesses, go ahead and guess. How long is a million seconds? Any other guesses? We only got one guess from Colleen Brown. All right, we got 11 days, 15 days. All right, I think Colleen's right. It's 11 and a half days. Okay, so we went from a million seconds to 11 is equal to 11 days. Now, how long is a trillion seconds? Not a billion. So now we went a million, billion, now a trillion seconds. How long is 1 trillion seconds? Converting it to, let's convert it to, let's say years. You can do it days if you don't think it's going to be a year. 6 years. Jameson says 31,000 years. 311 years. It is 31,000 years. So the reason this is useful is I think everyone has a pretty good idea what $1 million is. But when I talk about $1 trillion, that might not have as much relevance. So we went from 11 days to 31,000 years. That's the difference between a million and a trillion. And that, in essence, we can think about that the government, the Federal Reserve, printed not 1 trillion, but closer to $5 trillion. So my question to you, does this trend continue? 100, 1000, it has to. If you believe in math, it has to continue. All right, so how do we fix it? There's a lot of opinions. I don't think there is an easy answer, right? Like, to be honest, the government, I believe that I'm optimistic in believing that the Fed is trying to take care of people, and they were trying to print all this money so that we don't go into a massive recession. And they're only seeing as this is our only way out. And so I honestly don't have the answer of how we're going to fix the present problem of all of this money and all the debt that we are holding. If we have a debt holiday, I mean, go ahead, Chris.
I was just going to say, go back to Austrian economics, get off of this stupid modern monetary theory and all this crap that's putting us in this problem. Just let the markets do what they're going to do. It's going to suck, but not as bad as if they keep kicking the can.
And that is it, is we just keep kicking the can and we don't want to take our medicine. Right? I think there's, if you don't allow forest fires to happen occasionally, then when the forest ends up catching fire, it is way more destructive than when you have some consistent forest fires. All right. Now the question is, how big of a problem is this really? Is this really something that we have to worry about? Or is this something that we can just kind of stuff under the rug and feel like maybe the next generation is going to figure it out? Well, it's really, the shit's hitting the fan right now, right? These are the headlines that have happened just in the last, I think, 3-4 months or less. I don't know about you, but I have seen grocery prices skyrocketed. I went and bought a gallon of milk in California for my mom when we were on vacation, and the gallon of milk cost $9.50. I think it had gold in it. It had to have, but I've never seen that until this year. We are seeing home prices continue to go up. For those that are real estate prices, they're loving that. We're seeing gas prices continue to go up, and that's, you know, maybe more a function of supply. But there's the conversation about inflation is really happening, and I know that there are concerns where people are like, people are not going to be able to, the next generation is not going to be able to afford even a starter home. That's why the movement of tiny homes is accelerating, because that's all people can afford. This is a real problem. So my question to you is, what options do you feel like you have? What are you guys doing to solve this problem for you? So Jameson said crypto, but he might be the 1%. We haven't got to why crypto, but okay, Mark, I like that. Buy real assets. Chris is all about be your own bank, taking control of your money, buying real assets like real estate. Sal, you say buy gold and silver. Why buy gold and silver? What do those have that would make that a good thing to buy in this type of environment? The answer, if he doesn't say, it's scarcity, right? Like there's only so much gold and silver in the world. So other options you have is you could write to your senator, your state representative to say, hey, this is a problem, stop agreeing to spend more money. I don't know if you're going to get anywhere with that, but that is an option that you would have. Like Sal mentioned, you could hoard gold and silver. You could stock up on real assets like food, gasoline, real estate. You could make more money. That might fix your problem. That's probably why you're here, is you're trying to learn all the ways that you can make more money. And what I'm talking about today is obviously Bitcoin. And we're going to talk about why is Bitcoin the option. So let's talk about why Bitcoin. You might be asking, how does Bitcoin solve the problem of inflation? Why would this be even a solution? Which brings us to truth number 3. Bitcoin is money, and not only money, but it's a real asset, which might be hard to believe when you think of something that is digital. Something that's digital can also be real. It can be a hard asset. All right. How can internet money, something that's digital that didn't exist just 13 years ago, solve such a big problem? Here it is. Why Bitcoin? Digital currency is built using blockchain technology. Remember, the benefit of using the blockchain technology is no one controls it. And when nobody controls it, nobody can change the rules. That's the biggest thing with the Federal Reserve, is that we are operating on this financial system of the US dollar. But every time they print and create more money, they're essentially changing the rules of the game. Some of the rules that back Bitcoin that are part of Bitcoin's core is that there's only 21 million coins that will ever exist. That means it's completely finite. That rule can never be changed, ever. And it's gaining massive, not just massive, but real adoption by the people that matter. And we'll get into all of these bits here soon. So Mark posed a concern. I'm concerned about the big holders of Bitcoin controlling the prices. That's a valid concern. We'll table that, and we'll come back to that at the end. But thank you. And if you do have concerns, make sure you include that in the question, the Q&A part, so that we don't forget to go over the concerns that you have about Bitcoin. All right. So the first thing about why Bitcoin is that it's scarce. Just like you would want to hold gold and silver, real estate in times of inflation, is because of the scarcity nature of those assets. Every time the government prints more money, it's making our dollars less and less scarce, meaning that it's worth less and less. Whereas with Bitcoin, there's only 21 million that will ever exist. That rule can never be changed. And so you can have confidence that that will retain its value over time. Even more so than gold and silver, because we don't actually know how much gold is in the world. We don't know, even real estate is scarce, but they're continuing to develop more and more land. Like in Texas, housing prices hasn't gone up as much because they just keep expanding further and further out and away. And so Bitcoin is by far the most scarce asset we've ever experienced. Number 2, no one is in control of Bitcoin. Whereas with the US dollar, it's controlled by the Federal Reserve and the US government, which means they can change the rules. But with Bitcoin, it was created by the guy Satoshi Nakamoto. He wrote the code and then open sourced it to the world, and then allowed everyone to participate. And anyone can download and keep track of part of the Bitcoin ledger. And because it's all distributed, there's no one in charge, there's no one in control that can change those rules, that there will only ever be 21 million coins that will be distributed over the course of the next 120 years, I believe. 120 years until the last Bitcoin is mined. The next reason is that we are still very, very early. When we think about Bitcoin at 45,000 today, a year ago, it was less than, I think it was about $10,000. And so when you compare to where Bitcoin was a year ago, you may think Bitcoin is expensive. But when you compare it to other markets, or like Apple stock, or like the stimulus packages, we printed 3, we're probably closer to $5 trillion, or the market cap of gold, Bitcoin has a market cap of about 1 trillion. Compare that to gold, which is at 12 trillion. So many people call Bitcoin digital gold. The price of Bitcoin would have to increase by nearly 12 times for it to equal the market price of gold. Not only that, is you look at the life cycle of Bitcoin and crypto versus the US dollar. If you study the history of global reserve currencies typically last somewhere between 80 to 120 years. And we've seen this from dating back to the early mid 1400s with Portugal having the global reserve currency, has remained true for over about 600 years. Well, the US has had the global reserve currency status for about 100 years now. And so if the pattern continues, it may lose that status in the next 20 years. Whereas when we look at crypto and we look at Bitcoin and number of users compared it to the internet, we are still very, very early with only increasing adoption. And then when I mentioned that the adoption is not just by everyday people, it's by the people that matter. We're starting to see publicly traded companies hold Bitcoin on their balance sheet, just like they would hold gold. MicroStrategy is a publicly traded company that holds over $4 billion of Bitcoin on their balance sheet. Companies like Square and Tesla, companies like Fidelity and JP Morgan Chase, who used to scoff and laugh at all the entire Bitcoin industry, are now providing services to help their wealthy clients invest and buy Bitcoin. You have famed investors like Paul Tudor Jones and Ray Dalio that have said it's a no-brainer to hold a small amount of Bitcoin. And then you have countries, not just companies, but you have countries like El Salvador. And I'll admit, El Salvador is a very small country, but El Salvador made the proposition to make Bitcoin legal tender in their country. That's not the thing, that's not the trend of something that's going to just vanish into thin air and not be something that is very much used in the future. And the last bit, I mean, remember the truth that the thesis that I said is Bitcoin is money. Take a minute and look at this chart, and it compares these features, these things on the left are typical features of money: durable, portable, fungible, verifiable, divisible, scarce, has an established history, and is censorship resistant. And look how Bitcoin compares to gold, Bitcoin compares to fiat currencies. Let's go with durable. Gold has lasted thousands of years. It wins the competition of being the most durable. Bitcoin's only been around for 13 years, so it's not going to outpace gold, but it's definitely going to outpace fiat currencies, which has only been around since 1970. Portable, meaning how well can you send money from one place to the next? Well, Bitcoin wins by far because you can send money from here to France in about 10 minutes. Try sending $1 million of gold from where you're at to France, and it's going to take maybe a week, if not maybe a month. Fiat, somewhere in between. Fungible, meaning how can you guarantee that what you have is real Bitcoin? Gold, again, wins just because it's been around for so long. Verifiable, divisible, scarce. Scarce is probably what's most important to me, maybe different to you, but Bitcoin, like I said, is the most scarce asset we've seen. More scarce than gold and 100% more scarce than fiat currencies. Where Bitcoin really struggles in established history, right? This graph gives it a ranking of a D, whereas gold is an A+ because it's been around for so many years, and fiat's only been around for about 50 years. Now, I'd like to think about, would you invest in GM over Tesla just because GM has a longer established history over Tesla? I don't think established history in that sense is the right metric. All right, let me just catch up on comments. Salvadorians matter. Thank you, Cindy. Once you start using Bitcoin as a currency, you will be taxed on it for every transaction. It will be a nightmare to keep track of tax time. It's treated as property and taxed as capital gains, right? Currently, yes, you're right. There are plenty of tools that are making the tax issue very much simplifying the tax issue. Actually, so there are some propositions that are making Bitcoin less of an issue with tax, but that is definitely one issue. All right. So that concludes basically the 3 power truths of crypto. Number 1, blockchain is coming. You now understand what blockchain is all about. Number 2, we have a money system problem. And number 3, Bitcoin is money. Now, this is the time where I want to pause and answer your questions. This is a good time to bring up your concerns, maybe of why you don't think Bitcoin really is the solution to inflation. The main thesis is that it is fixed. There's only 21 million coins that will ever exist. Now, I want to go to the concern, I think it was from Mark, about big holders of Bitcoin controlling the prices. I don't have the sources right on me to tell you that big holders are not manipulating the market. What is manipulating the market are the headlines that people are using to create fear, uncertainty, and doubt. Do you remember the time when Elon Musk came out and he was posting things about the energy consumption of Bitcoin miners? You had China coming out and banning Bitcoin. There was just all of these negative press releases about why and how bad Bitcoin is. And it basically scared the market and got people to sell a lot. And that's how they've manipulated the prices. If you fundamentally believe in Bitcoin, you don't have to worry about where the price goes tomorrow, the next week, the next month. You're looking more long-term over the next year, next 3 years, 5 years, 10 years. You don't care about that volatility when you realize that math wins in the long run, when as they create more money, create more dollars, and there's only ever 21 million Bitcoin that will exist, the price of Bitcoin has to increase. Now, here's some really good questions. Why is the arbitrary number of 21 million? I don't know that. That was just the number that the creator chose. Ricky asked, why is there only 21 million coins that can exist? All right, let me take a minute to try to explain this. Bitcoin is open sourced. It's software that's open source that's not controlled by anyone. Now, you have Bitcoin miners that are basically, you can think of miners they're the accountants that are validating the ledger. They're making sure that all of the transactions that are happening on the ledger are legitimate. And there's so many miners around the world that in order to change the rules of Bitcoin, you'd have to get all of the miners to agree to change the rules. But there's not just miners that are mining and validating the blockchain. You also have the developers that are continuing to update the blockchain, the Bitcoin code. And so you'd have to get all of the majority of the miners and a majority of the developers on board to change the rules of Bitcoin. But not only do you have to get the majority of developers and the miners, you have to get the majority of the users, the investors, the people that are buying and selling and using Bitcoin every day. You got to get the majority of them to buy in on changing the rules. You don't have to, not just them, but the companies that have been built around Bitcoin, like the financiers, the crypto exchanges, the GBTC, the type of instruments that are being built around the financial instruments, like the options trade, the options and ETFs. All of these things that are being built are built on the fact that there's only 21 million coins. And so in order to change the rules, because it's distributed, it's not controlled by anyone, you'd have to get the majority of everyone to agree to change the rules. Because that won't happen, because we've seen so much adoption, those rules can't change. And you can be confident that that is how the system works, because you're seeing big players like public companies that are holding Bitcoin. They're also operating under the rules that those rules can't change. Okay, Chris, this is this is a very important issue. I'm concerned about government regulating it like China is trying to, and like Nixon did with gold. I'm also concerned that it has no market or means of exchange. It's a great store of capital, but money is a means of exchange, and you can't use this for basic living needs, at least not yet. Okay, there's a lot there. First of all, in El Salvador, there's a place called Bitcoin Beach, and people are starting to use Bitcoin as a means of exchange and are using it for basic living needs. The idea is that you're not buying it on the idea that it's usable today. You're buying it as basically an insurance and an investment in the future. By the time that it's widely accepted, it's not going to be an investment opportunity. It's definitely hard for people that are in the mindset of real estate that are cash flowing their property. You're not cash flowing your blockchain, your Bitcoin. And so it's a different type of investment. I'll be honest, it is a little bit speculative. And that's why I don't recommend people holding much more than 5% of their investment asset, in their investable assets. But if they do hold 5%, let's say you have $100,000 and you invest $5,000, that's 5% of your investable assets into Bitcoin. And worst case scenario, it gets shut down like China's trying to block it, and your 5,000 goes away and you're only left with $95,000. I'm going to guess that your financial life has not changed much. But if what I think happens actually happens, and Bitcoin goes from 40,000 to 100,000 to eventually 400,000, eventually a million, that 5,000 just became 100,000, and your 100,000 became 200,000, and you just doubled your money by a very small investment. That's how I think about this. I think about this as being the best risk reward opportunity out there. I'm not saying it's the safest. I'm not saying go put 80% of your money in. I'm saying start small, but start with an amount that's going to actually do something.
Okay, good answer.
Now, the concern about governments regulating it, that is 100% valid. But as governments, there's also evidence that governments like El Salvador are looking to make it legitimate. And not just El Salvador, you have countries like, I think it's Uruguay, even Mexico, Venezuela. I don't think of Venezuela, but you have all these smaller countries that are not in a position of power that are looking at Bitcoin as like, wait, this might be a way for us to get out of the rule of thumb of the US dollar and take back some more control of our own economy. And so, yes, I'm sure governments will continue to try to regulate it. It's going to be volatile. And that's why, again, you need to think longer term. All right, let me make sure this is, I can see all the questions. All right, let me dig into the Q&A. I'm getting a lot of questions. This is great. I'm making sure we, okay. Okay, Sarah asked, what are safe Bitcoin apps or sites in which to invest? I saw an advertisement for an app that rounds up your spending into Bitcoin. Don't recall what app or site it is. How do I know it is not fraudulent? So because we are in the wild, wild west of crypto, there are a lot of scams out there. And so I have been playing in the space and have been scammed plenty of times. I've lost money in the space, but now I know how not to lose money. And I'm happy to help further on, but you cannot go wrong by using Coinbase. Coinbase is a publicly traded crypto exchange. It's probably the easiest, the safest, most reliable. I'm not saying it's the place that's going to save you the most money, but it is the easiest and the safest.
I use Coinbase. It's just so elementary that like people that want more features hate it, but it's the only one that I know to use. Plus, it's really expensive. But
yes, there are cheaper ways, but we'll get there.
Okay.
Lisa asked, what does mining mean? I don't know if we'll have time to answer that, but I'll have a solution for you if I don't get an answer to your question tonight. What is to prevent the government from creating a crypto that will make Bitcoin obsolete or not legitimate? This is a fantastic question. I love this. What happens if the government created a crypto? Who's in charge of the crypto? The government is. Who's in charge of Bitcoin? No one is, right? Like we talked about, though, the whole solution to Bitcoin is that nobody's in control. And so what I was saying is that as long as there is someone in charge of the money, then it can change the rules. The whole value proposition to Bitcoin is no one is in control, so no one changes the rules. Hopefully that answered that, Karen. Anonymous, what guarantee do I have that my money won't somehow be stolen after I invest tens of thousands into Bitcoin? This is a great question. So that's why you need to have either hold it in a trusted exchange or in a wallet. And that's actually what, before I answer that fully, you guys are asking a lot of great questions. I have just basically touched the tip of the iceberg. This question was actually already answered. How are there only 21 million coins? Some people will also ask, what happens when the last Bitcoin is mined? What about currencies like Ethereum, Ripple, XRP, Dogecoin? What is mining? Should I be mining? How high can the price of Bitcoin go and other coins go? And then where do I buy it? Not only that, you have to understand that the world of cryptocurrencies is enormous. There's over 10,000 different coins. There's 100 different places that you could buy Bitcoin on. You could invest it with your self-directed IRA. You can use your retirement accounts. Once you do, you got to figure out taxes. Then there's these things called NFTs. There's mining versus staking. You got to understand risk management. There's indicators, different indicators of when to buy and when to sell. And then the idea of central bank digital currencies. There's so much going on. And so what I've done is I've created a complete education program that takes you from soups to nuts, everything that you would need to know to successfully and become an independently successful crypto investor.
Is this the same one I went through?
This is what you went through.
Listen, folks, it's ridiculously good. Like literally, I still don't know what I should know, but that's probably because I didn't pay attention enough. But this is, I'm sorry, I didn't mean to cut. Just so freaking good.
I appreciate this. I've broken it into 4 modules to make it super simple. But I go through everything that you would need to know, from how does Bitcoin work? Why should Bitcoin or crypto be considered an asset class? Where's the best place to buy crypto? I go through all of the pros and cons of all of the different exchanges and give you what's best for you and what you're looking for, meaning which ones are going to save me the most money, which ones are going to provide interest on the coins that I hold, which ones have the coins that I want to buy. Once you understand that, then you get into the next module, which is, why is it still so early to buy crypto? Where's the price going to go? And how do I actually know that? What's the math behind how high? I'm not just putting my finger to the wind and saying, I think that Bitcoin's going to $100,000. I was like, no, there's actual math that this is backed by. Understanding Bitcoin mining. And then once you understand those concepts, then we have to understand the risks. We have to understand to balance the opportunity with the risks. What are the risks of regulation? What are the risks of other cryptocurrencies coming and taking over Bitcoin, like Ethereum, like XRP? And how should I diversify? Then what are the indicators that I should be using to know when to buy, when to sell, when to trade? And how can I customize more portfolio to make it so that it fits my situation, right? Like everyone has a different situation. Some people are nearing retirement and they can't afford to make a financial disaster. Other people are, they're earlier in their career and are looking to take more of a gamble, more of a risk. And so if this is something you want to do more with, if you want a third-party system that fast tracks your education, that doesn't take more than, I'm going to say 5 hours. I made it so that you can get it in 4 hours, but I'm going to be maybe a little more generous and say that it might take you 5 hours. It took me hundreds of hours. And I know that this works because I've had plenty of people that they were gonna dabble and put maybe $10,000. And after going through, they ended up putting 100 to 200,000 in. They went from holding a fraction of a percent of their net worth to upwards of 30 to 25%. And then you can be part of a team that helps you remove the emotion and make intelligent decisions and help create a personalized strategy and a plan. So that is available for everyone, that if I don't get your questions answered tonight, we can talk about that. All right. Let me just keep going through these questions. Michael, in just $100 into it, will there be enough Bitcoin to supply the world in the future to be used as a global currency? Great question. The thing that you have to understand about Bitcoin is that it can be divided into 100 million pieces. We eventually won't be using full Bitcoins. We'll be using a fraction of a Bitcoin.
Yeah, can I just show something here real quick? I mean, it won't
Yeah, you want me to stop sharing?
Well, I could just show my Coinbase and just show them. So like just a second ago, I bought a little bit more of it. So I bought 0.13295196% of one Bitcoin. So you can buy anything. I just went in while you were doing that because I wanted to test it. Somebody was asking about $100. You know, I have $100 weekly recurring for Bitcoin and for Ethereum for both of them. So you can do that. You could probably do $10 a week. You could probably do $10 a month. There's really no restriction. You just buy little fractional shares and you just do it right on your phone. It's actually, to me, it's too easy. I hate it because it's too simple. But to someone that really doesn't want a complex trading platform, the Coinbase one has served me well.
Awesome. Yeah, thanks for sharing that. You can, right, like you can just buy $1 of it, $10 of it. So that's how, by making it smaller and smaller, you can, there's plenty of Bitcoin to go around the whole world. So Cindy asked, do you think the proposition of taxing unrealized gains has legs? So this is a good question of like, can they actually tax unrealized gains? That's a good question. I sure hope not. One benefit of, I think holding crypto is better than stocks, because in stocks, you can't, if you were to sell something at a loss, if you were to sell Apple at a loss, you couldn't do a tax loss harvest until you had to not buy Apple for 30 days. But with crypto, it's taxed as property, so you can sell immediately at a loss and then rebuy back in. That loss will offset any of your gains. So it's much better tax-wise than even buying and selling stocks. This might be an obvious question, but does Bitcoin require internet service for its value? Gold is valuable with or without internet, computers, electricity. The answer is yes, it does require internet. But basically, our entire financial system, the US dollar, requires the internet, because if you don't have the internet, you're not going to be able to use your credit card. So we're going to have a lot bigger problems if the internet goes out. I'm concerned about price volatility and regulations in the future by government agencies. Could Bitcoin ever go to zero? Again, I don't know. That's my first answer, is I don't know. My guess is that Bitcoin will never go to zero. I think at worst, it maybe doesn't get any more traction and just hovers somewhere between 10,000 and 20,000. I think closer to 20,000. So maybe if you look at it today, your worst case scenario is about 50%. But on the upside, if you look at not just the risk, and this is kind of like where mindset gets into play of like, if you are only worried about the downside, yeah, it could go to zero. But if you look at the upside is somewhere north of 10x, maybe even 20x. And so you should then position yourself so that the volatility doesn't matter to you. If you just start 1% of your investable assets, it goes to zero, you don't care. If it does 20x, you love it.
Spencer, I had a world-renowned economist on one of our 3-day trainings, and he's coming back to the next 3-day. And he's not a Bitcoin or a crypto guy at all. He doesn't love it. I mean, he's kind of old school, but he did this whole write-up, and I'm a paid subscriber to his newsletter. I mean, like a 4-page write-up talking about Bitcoin and the levels. Like he was charting it like an economist would. And he says it's absolutely feasible and more than likely will happen. He was saying by end of the year or into 2022, based on government, printing and all this stuff, he said it will hit 120. He did it solely by the math. And this is from someone that's not pro Bitcoin. He actually hates it. He's like a Warren Buffett against cryptos, but he just did it because all of his people keep asking him, tell us about this, run the reports. And he just charted it and he just looked at it and swear to God, 120,000. He said, absolutely will happen. But then he said the same thing. Then more than likely when the markets crash, it will fall back to its original levels. And he said 20,000 is the floor. He said that's what he said. So I'm just talking from an economist that has nothing to gain and doesn't even like cryptocurrency. That's straight out of his mouth.
That's awesome. Yeah. I always love when you get more and more sources from different places, basically saying the same things. That's super helpful. I wanted to answer another question here. For those that are wondering, this course really meets you where you are. I've had people that have done 50 hours of research and just are of crypto already, and they found a tremendous value out of this course. I've had people that have no idea, just getting started. It's for everyone. And for those that sign up tonight, I'm offering 4 Q&A sessions. So I do Q&A sessions once a week that you can come in and ask whatever question that you need to make sure that if the question is not getting answered in the course, you have those 4 sessions to be able to get your questions answered. I want to make sure that you have everything that you need to be successful.
You know, one other thing Mark said earlier, Spencer, and I just want to bring it up because I'd never heard anyone say that. What if, and I know it's kind of conspiracy stuff, but what if there was like an electromagnetic pulse that was shot out to destroy all computers, hard drives, and everything? I mean, could that essentially wipe out all the blockchain records? Never thought about that. Maybe we all watched too many movies with those I think Fast and the Furious had that electromagnetic pulse thing.
So I don't know enough about that to have an honest answer.
Yeah, I've been in a pretty high profile mastermind with you. So I know where you're at with your investments. And just so everybody knows, folks, he doesn't really have to work. You know, he doesn't have to do this. Sometimes I would say, I guess he really wants people to know about this, because I'm not going to share too much more, but just know sometimes people give a lot when they don't have to, because they feel they're the ones and one of the only ones that are going to do it the right way. And when I first talked to Spencer, you know, he was talking about this, and I'm like, he didn't, I don't even know if he had a course at that time, but I told him, I said, there's so many scumbags out there saying, oh, we got this course to teach crypto. We got this course to do that. And, you know, I had people come into my store pitching me, and every single one of them was teaching me basically how to give them my money. And then they would basically go out and create mining operations and all this stuff. It was so like just snake oily. And then Spencer's like, well, I'll just teach people how to do it themselves. I don't want to do any of that stuff. Like, here's the blueprint. Here's what you do. Here's what you need to know. And like, at first I wasn't going to go through it. And then one of our students went through it, Lisa, and she said it was so, I mean, literally just couldn't stop talking about it. I'm like, Lisa, I get it. Okay, Spencer, I need to get this program. And then I went through it. So yeah,
I'll be honest, like, I was afraid to come out as the crypto guy because I didn't want to be the snake oil salesman. My reputation is the most important thing to me. And I wanted to be a place where people can trust. And so that's really what I've been working my ass off every day, is to be a guy you can trust in the crypto space. And it's brought a lot of success because there's not a lot of people out there like that. There's a lot of people shilling shit on YouTube and on Instagram and on TikTok, and I don't want to be any part of that. Mm-hmm. So, but this has been a great group. I've been really in love with everybody's engagement here. It's been fun.
Yeah, and then Unanimous, I think, was a bit confused at the last one. Do you want to hit that about daily trader? Okay. I think he's mixing the fact that you are like a heart surgeon, that you do one thing and one thing only. You're not teaching options and how to buy stocks and all that.
Yeah, so I am not a financial advisor. I'm not giving you any recommendations. I am just giving you the education so that you can then make the decisions yourself. I'm happy to field your questions of like, I'm thinking of it this way. Can you tell me where I'm maybe erring? And that will help you figure out what other coins. Like, I'm a big fan of Ethereum. I probably hold more Ethereum than Bitcoin. That would be an entirely new, different discussion. But I'm not here to hold your hand and tell you when and how to buy. I'm here to give you the education and basically tell you, think long term and why you should be in the first place.
I'm gonna hit this earlier. I just hit it back. Robinhood. I hate Robinhood. Just openly, I think any experienced trader does not trade on Robinhood. Robinhood is for the millennials that are just getting into it. I think it's a slime ball trading platform. But anyway, now that we get past that, are they allowing people, like, can you trade crypto on Robinhood now?
Unfortunately, you can't.
Oh.
The reason I say unfortunately is it's not real Bitcoin. If you buy your Bitcoin on Robinhood, you can't then withdraw or send it to another wallet or another exchange.
Are you serious?
Whereas if you hold it on, if you buy Bitcoin on Coinbase, you can then withdraw your Bitcoin onto a private wallet that you hold personally, or set it to a different exchange if you want to buy a different currency. But it's basically this modified version of Bitcoin. It's like a stock version where you can't remove it off of Robinhood. So if you wanted to move it, you'd have to sell that Bitcoin into dollars and create a taxable event. And that's really frustrating. So I tell most people, I tell all people, don't buy on Robinhood.
I think Robinhood's just scumbags. That's my opinion. That crap they did with GME and all that, that's just, that, I'm not gonna get started on that because it's your time, not mine. But if you guys are using Robinhood, really look at yourself in the mirror and understand that Schwab and TD Ameritrade for stock trading are far superior to Robinhood, and they're stupid. Here's a stock that I give you for using our platform. Like, when they have to give you something to get you to put your money there, strike one. And I could go to probably strike 25 with that stupid platform. I think it's toxic, and I think that truth will come out someday. My opinion.
Yeah. Other things that come in part of the course is how you can earn 8.5% interest on your dollars without even touching Bitcoin.
Oh, yeah.
You can keep your money in dollars and earn 8.5% annual interest with basically, I'm not going to say no risk, but it's very, very little risk. 8.5%. That's pretty good.
A lot of people are talking about that right now.
I do think that blockchain is the future of voting. At least I hope it's the future. I feel like there's will be a lot less
Voter
manipulation, fraud. Yeah.
I agree with that.
So I think we've touched basically on all of them.
I'm reading through them. I don't think there's any. What is this one? You might have hit it. Theta.
Theta is just another cryptocurrency.
Okay. I didn't know if it was the Greeks or in options or what he was talking about.
Yeah. The only reason I don't want to get into that is because there's 10,000 of them, and I don't want to open the floodgates on that.
Yeah, I don't see any that you didn't hit. And Kathy, I didn't mean to bash Robinhood. I just saw your post there. If you're using it and you like it, that's awesome. I just tell people to be aware of that one.
So, did you guys learn something today?
Yeah, we learned that if voting goes to blockchain, they can't cheat anymore. I'm just kidding, man. I'm just joking. This was awesome. Awesome. It always is. This was probably the best one you've ever done because it went into a lot of the rabbit holes that we normally kind of glance over because we don't have time. Normally you got a half hour, an hour, and you got to get a little bit deeper into some of the areas that I'm always questioning. And yes, there are a lot of unknowns, but there's a lot of unknowns in any investing. That's why they call it investing. That involves risk. It's something that I've definitely been dabbling in, and I will continue to. I just don't blindly do it. I trade it with rules, where I buy, where I, sell portions until I feel like we've got a solid track where we're going to break through. And I don't know. I mean, everybody has to buy it the way they are, but a lot of people, I think the best thing they can do. Can I tell a story real quick, Spencer?
Please.
And I'm reading a book. Okay. And it's a book about money and the psychology of money. And it was talking about this really incredibly wealthy guy. And he was a young guy. He sold like a technology company worth something like $50 million. And he was arrogant. He just went out and blew all of his money, made sure everybody knew he had money. For example, he broke a lamp in a hotel, and the guy said, "You just broke a $500 lamp. You have to pay $500." And he says, "Don't ever insult me like that again. Here's $5,000. Get out of my face." Just that kind of guy, because he had all this money. And then there was this just normal guy. He cleaned floors in a grocery store. And I can't remember what else he did. He worked in a lumberyard, like just an average run of the mill guy. Never really got married, lived in a 2-bedroom, super small house his entire life. And nobody ever knew the guy, ever. Never drove fancy car, never did anything really, just lived life and went on. When he died, he became, and many of you would probably know this, when he died, he became, an internet sensation. He had $8.7 million, $8.7 million. And he left most of it to the local hospital that he believed in truly, and the library. And he left a little bit to someone else. But the guy that I talked about that was giving all the money was broke and went bankrupt, lost his big houses, lost all of his cars. So what did this guy do to get $8 million? He never made much money. I mean, he swept floors and worked in a lumberyard, or I might have it wrong, but like, think about that. That's all he did. He slowly and steadily, with every, money that he could saved and put money, and he just bought stocks. It doesn't matter what he bought, but he did this over 40 years. And he just kept buying it. He just never touched it, never looked back, never sold it, never traded it, never was like, oh, I'm going to trade options. Never did any of that. Just bought it and just sat on it and just kept doing it for his entire life while he just continued to push on with what he did. He's worth $8 million. Now, I'm not saying that you all should do that, but you have to understand that there's some merit. And I'm always talking about, get out of the market, move it to US Treasury bonds. But the thing a lot of you don't know that I do is I am always investing, but I'm always investing very small amounts consistently and persistently. You heard me talking about Ethereum and Bitcoin. I am no expert. I don't talk about it. That's why I bring Spencer on. But I went through his course and I got just enough information, which is far less than most of you have, to feel comfortable about a strategy like that guy, that basic run-of-the-mill guy. And I'm going to continue to just keep putting that money in. I don't miss it. I don't lose sleep over it. Sometimes when I put the bigger chunks, a couple thousand here, a couple thousand there, when it gets to 30, I get a bit nervous, but the 100 that I put in, it's not money that I miss. And I bet you any money someday I'll look back. I don't know. I'm not going to make predictions, but I'll probably look back at that little systematic $100 investment, and it'll probably be worth millions and millions of dollars. And then those millions of dollars, what will I do with it? Probably give a lot of it away. Probably give it to a good charity, help 10 Lives Animal Hospital, take care of more feral kitties so that the kitties don't have to run around without homes. I mean, hey, listen, everybody's got their thing. Mine is kitty cats. Love it, hate it, I don't care. But also helping people in third world countries that need help because they don't have governments helping them. So all of you need to pick your path and pick what you're doing, but there will never, ever come a day that doing investing such as, I don't care if it's Bitcoin, Ethereum, I don't care if it's Dogecoin, but you'll probably end up with nothing there. Doing something systematically, consistently, and persistently when it comes to investing is always going to win, but it's not a get rich quick scheme. It's not something you're going to be like, oh, I just made a ton of money. Oh my God, look at this. I'm going to go buy a new Mercedes or a new BMW. No, but just always remember that story about that guy, that average Joe that died with $8 million. And he probably never made a penny over 30, maybe 40,000 working 2 jobs his entire life. I'll leave it at that.
That's awesome, Chris. Appreciate that. Well, again, thanks for having me on here. This has been a blast to just engage with everyone on here. And again, if the link or the code did not work, please send me an email. We'll get everything situated. If it billed you too much, send me an email. We'll get everything figured out. Again, I'm only wanting to be of service and help people have a resource to figure this out and not go out it alone and potentially get hosed or get taken for, which I know way too many people have. And I also don't want you to be like, in a year, be like, man, I really wish I understood crypto better so that I could have made so much more money, right? Like, we all wish we would have bought Bitcoin in 2013, but there was nobody that would have held our hand and taught it, like, this is why you need to do it. Well, that's why I'm here. And this is why I wanted, so you're not sitting on your couch looking at your portfolio being like, man, I should have bought Bitcoin. I should have done that. Like, this is a really cheap investment to not have that regret. So, and again, if you really are completely dissatisfied with it, I'll give your money back. I'm not trying to take anyone for anything. So again, I really want to do well by you and your audience and just provide a lot of value. So thanks for having me.
I appreciate having you on, and I loved your content and your stuff. And you're just, like I said, we met at that mastermind, and I just knew right away. I like literally went up to you. I said, we've been looking for you. We've been looking for someone that's literally ethical and doing this for the right reason. And here you are. So kudos to you. And that right there mentions the power of networking, the power of masterminds. So you all have a good afternoon. All right. If you like that video, make sure you check out this video right now. And also don't forget, subscribe to my channel and don't ever forget to smash that alert button. We'll see you on the next one.